What's up, YouTube? It's Joe Catchpolia sitting on the couch making some money investing in fractional real estate online as usual. Today I'm going to go through my Mogul portfolio results. These are the February results. They just got paid out 2 days ago at the end of March. I received just under $79 in dividends. I've total invested of $30,000, but really there's $7,500 of investments that those properties aren't closed and operating yet. So that's the results of $22,500 roughly dollars invested. A little bit disappointing, but so if you look at my overall number, my annualized yield, they have it listed at 4.4%. I feel like they're kind of playing with the numbers a little bit because they're using reserves for the short-term rentals that aren't covering everything. So instead of blending a negative with a positive, it shows up as it just makes us a little stronger. Now at the same time, if I just took out my short-term rentals, if I had never bought those, I'd be doing amazing. But let me jump into each one. The first one, this is the Axelrod. This is my very first property on the platform. It's also my largest investment on the platform. I didn't realize how quickly they'd be rolling out properties, and so I thought I'd be buying less properties in bigger chunks. Now I'm not doing that. It's a duplex in Houston that is run as a single short-term rental listing. It started off pretty well, but it's so last year ended up having an annualized yield of 5.12%. But again, I think that's overstated because they, used reserves for some months and didn't count that as a negative cash flow. So far this year, absolutely no cash flow, but they have a really optimistic write-up about it. They talked a lot about what they're doing as far as getting it. I think they switched managers on this one, but or maybe just their pricing manager, like the people that actually do the online pricing for them. But they all also are doing some changes to the property so that it can sleep 2 additional people. And they think this is they're redoing the listing, stuff like that. So they seem pretty optimistic, but still negative cash flow this month, although it's half of what it was last month. So I guess that's an improvement. And we did raise a gigantic reserve on this one, but we can't, hopefully they get it together. And this should be, some of the slowest season right now. So it's not surprising. I mean, I think all the short-term rentals, if they have some months where they don't quite cover their debt, that's not a huge surprise. But they need to have amazing, strong seasons or else we're going to have a problem. The Rhodes, this is one that I almost didn't buy initially, but it's been one of my best performers. It's always been always been above 10% or right around there. This is a pad split in Mesa, Arizona, so wish I had picked up a bigger piece of this. I got free shares in it when I bought the Axelrod because they were running a deal then. And then I think I got $250 worth, and then I bought another $250 worth. And then they're saying, this is the $9 additional is what they say it has increased in value. I think that's the only one that is showing any appreciation so far. Before I forget, please like and subscribe. In the description of this video, I have links to all the places where I'm currently investing in fractional real estate online. Please do your own due diligence on all of those links, all the platforms that I mentioned, and any properties that I mentioned. Just because I'm investing on them doesn't mean that you should. I've lost money on some platforms, certain deals I'm losing money on, and so you want to make sure you're doing your own due diligence. I'm just trying to share my experience, what is working and what's not for me, the way I'm thinking about properties, all that sort of thing. Also in the description of this video, there's a link to a Discord channel that I have set up. We have over 250 members now, where you're just sharing due diligence, sharing strategies, ideas, talking about different platforms. There's no cost to it. It's not a sales funnel. If you do join, you'll probably get DM'd by an imposter version of me trying to sell you something. Just report them. hopefully we can just get that mess cleaned up so that doesn't continue to happen. Okay, but yeah, so that's the Rhodes, one of my best performers and one that I just have a tiny piece in. The Wags, this is a short-term rental in Houston. The situation's kind of confusing on this one because I thought, so there's a title issue. I thought it got foreclosed on. It wasn't operating for a while. They are operating it now, operating at a loss currently, but still, they have some notes about the performance of this property improving. They didn't actually give us a new note about what they're expecting for the title claim and settlement with the previous seller who created the issue, although they mentioned it on the webinar and thought that they should have resolution in the next 2 to 3 months is what I think they said. I'm not 100% sure. The Mafi, this is another pad split in Decatur, Georgia. And it's one that's just done well for me all along. I mean, there's kind of a trend here, right? Most of my short-term rentals are struggling. Most of my pad splits are doing real well. The Johnson, this is a short-term rental in Austin, Texas. Let's see. It's another one, they didn't negative cash flow, although not as bad as January. And again, very optimistic note about, where things are progressing. And that's what on the webinar as well, they talked about, we think a lot of the changes that were made, they were already seeing in March. Obviously these are February's results, so we won't, feel the benefit of those until next month. But they seemed very optimistic about a lot of the short-term rentals. The Celeste, this is another short-term rental in Houston, Texas. This is the only one that I purchased that doesn't have a pool. Probably against my better judgment, although it's not doing any worse than the other ones. And again, they're pretty optimistic about it. So, and it is, it's, but still every month negative cash flow. Hopefully they get it together. They seem real confident when they talk about it that they have that they have a sense of getting these working. Short-term rentals are very seasonal, but now I've owned a lot of these for close to a year and have had extremely poor performance across the whole time. I think they've done quite a few changes and tweaks, and I think, as long as they're proactive and work at it, I believe the assets that they picked out were fantastic. I mean, that's why I invested in a lot of these. The data that I had made it look like these were going to be great deals. So not really sure why they all struggled so much, but hopefully we get past that. The Victor, again, this was a pad split in Atlanta, Georgia. And yeah, so this was a down month, but we still have a good average yield. I think they had a note that there was, one room that was vacant for all of February, but it's been filled. So it's at 100% with March rents, so they think this month should be better. And even with that, it was cash flow positive for the month, even with an empty room. So that's fantastic. The Andres, another Decatur, Georgia pad split. And yeah, had a really strong month, right? I mean, look at it's fantastic. What did they say? Had a room vacant all of February. I wonder if that's a copy and paste error, because that is the same exact note that I saw on this one, right? For the Victor. And I don't know that I believe that because of how strong this monthly yield was. So I think that's probably an error. We've seen that a little bit. Let's see. The Chelsea, and again, Atlanta, Georgia pad split. And, right on track, killing it, right? These all of the early pad splits that I got are just doing amazing. It's part of the reason why that some of the later pad splits I just wasn't as interested in, because it seemed like the yields that we might end up achieving are just not going to be there. Be the same as these early ones, and I just want them to find these types of deals again. I don't know what happened. The Ratliff, it was a Douglasville, Georgia pad split. And this one's been pretty strong as well, right? It's averaging 10% yield so far this year. I mean, that's just a combination of January and February. Let's see, the Venn. what? Yeah, is a Little Burn, Georgia pad split. What was their memo on this one? They said it was fully occupied in February. Why didn't we do so well here? So it was fully occupied. February's shorter, right? And so pad splits are sensitive to how many weeks you're actually paying. So I mean, it looks like lower revenue. So I bet there was just like one less payment that hit during this month. The Hugo, this is a short-term rental in Dallas, Texas. Same problem again. Negative cash flow and really high expectations, right? Like they're saying, hey, all these things are going well. We're expecting to do this much better. Hopefully they're right. We'll see. All we can do at this point is I'm not buying any more short-term rentals from them at the moment. I haven't picked up one in a while. I want to see how they perform. Although it looks like some of their top performers this past month, if you look at their email they put out, were short-term rentals. They just happen to be ones that I didn't buy. So maybe they got better at picking those. I don't know. The Pinkman, this is one of my worst performing pad splits. It's in Atlanta, Georgia. This is one where the seller was going to do some work before we closed on it, and somebody had brought up, why do we have, so much OpEx, and they mentioned that they knew a lot of this was going to happen when they purchased it, that there was going to be a lot of repairs, and we knew the seller was going to do some, but I guess it just wasn't going to be as turnkey, so. They don't expect these expenses to last forever. They think that a lot of it was stuff that was identified early on, and that was part of the reason there was a bigger reserve for this one. So I thought that was kind of an interesting comment. Yes, it had 2 rooms vacant the majority of the time, but now it's fully occupied. But our occupancy hasn't really been the problem on these ones. The OpEx has just been bigger than on a lot of the other ones. The Gilmore, this is Tempe, Arizona pad split again. Did okay this month. Not its best month, but not its worst. What do they have to say about it? It had 1 room turn mid-month and is set for March rents to exceed February. So, we should do better next month. But I mean, not terrible, right? I mean, I'm not excited about these returns compared to some of the higher, some like the 14s that I have up here. But it's not a bad deal, right? I mean, it's not, and hopefully we get back up to these double-digit returns. We'll see. And then the Swift, I think this is my only short-term rental. This is a short-term rental in Glendale, Arizona. I think it's the only one that has had a positive cash flow with this month, but I think any time recently too. They talked about their, occupancy goes up. For March, the occupancy is going to be even higher. They said over 80%. Even though it's improving, they're going to transition to a new hyper-local property manager. I think that's kind of interesting because it seems like if the performance is improving under the current manager, it's an interesting decision to still switch. Maybe they had made it beforehand, but I mean, like looking at February compared to January, or December or November, top line revenue beat all 3 of those months. So that's a good sign. If we can, it still needs a little bit more improvement before we start making some money. Getting some real yield, but at least it is positive for the month. Hopefully that keeps up. And then I have the Blitzen, the Goldfield, and the Buffett that are all properties that I purchased, and that's what I mentioned before. These are all ones I purchased that, don't have their first dividend yet. We're expecting in April, June, and May. So anyway, that's how my portfolio has performed. If I had only bought pad splits, I would be extremely happy with Mogul right now. And maybe if I had picked different short-term rentals, I don't know. I bought the Houston ones, the Austin. Those are ones I know those markets. I mean, not, even Dallas. Like I have a good sense of what those markets should be, and I've just been surprised. I think we're really underperforming I don't really understand what the problem is, but it seems like they've identified a number of things they can do to improve. So I haven't lost all hope yet. Yeah, I mean, I'm hoping that they're right, that they're going to be able to turn those around, and then we'll make some money. If not, I mean, that is the beauty of fractional real estate, is that I just won't buy any more of those. I'm not going to lose a ton of money on any single one. And, even if we had to liquidate my biggest investment, the Axelrod, which is not performing great, I think that one we actually got a real good deal on. So if we had to turn around and sell it, I think we could. Not 100% sure on that. I think we could and be okay, like not lose a ton of money and not, hopefully even make a little bit, but we'll see. But and that's one of the things they've talked about quite a bit, that they expect the yields on the pad splits to be better, but the appreciation to be better on a lot of the short-term rentals. We'll see if that's the case. At the moment, until they've really proven to me that they can operate the short-term rentals better, I think I would just keep buying only pad splits from them. And I did buy one long-term rental that they put out. That's the Buffett. Let's see. But only time will tell. So that's how all mine operated. If you don't mind, share in the comments or jump in the Discord and let me know if you had any short-term rentals that did well. I'd love to hear about it, right? Like what's going on with those? Were they just ones that it was their first month of operation, so they didn't have debt service built into their numbers? That's one of the things that makes it so some of them look good, and it's just, well, they're not paying debt service yet, so of course they look good. If you have any more insight into any of these, as always, I think the more we share info, the better off we'll be as a community in doing this, and I think we can all make a lot of money. Anyway, that's it for me for today. Until next time, I'm going to just keep making mistakes so that you don't have to.